morning. Welcome to Trading Hour. I'm Reema Tendulkar with Mia Pavitra Parekh and Sonal Bhutra. And first, here's wishing all our viewers a very happy, colorful and a safe Holi. The color of the screen today is clearly green. So after that big mega 270-point rally on the Nifty, we followed it up with a near 200-point gain on the Nifty, while the Sensex has rallied close to about 650 points. This is a very strong and powerful follow-on rally. Currently, the Nifty is now trading above the 20-day moving average of 17,700, but it's still about 60-70 points away from its 50-day moving average, which is 17,850. So that's going to be the immediate hurdle for the markets to conquer. It's a combination of factors which is working. We've seen renewed buying from the institutions, both the FIs and the DIIs, the up move in the Adani Group stocks, in a way a gauge for the risk sentiment, the fact that China's GDP forecast for 2023 at near 5% or around 5% is a bit underwhelming. Perhaps that will spur some, moves into the Indian markets over China. So it's a combination of factors, but just want to pull up the Adani Group stock since we are on the subject. Adani Enterprises and Adani Ports. These two stocks have doubled from their February lows. Post the report, Adani Enterprises had gone down to a low of 1,017. 1,017 was the low in Adani Enterprises on 3rd of February. So from that level, it's doubled. Adani Ports, the low in Adani Ports is 395 and not 95. So that's the mistake there. The low in Adani Ports was 395 and now the stock is, at 700. So it's practically doubled. So that gives you an indication of the kind of buying that we've seen in these group stocks. Apart from that, it's metals, which are doing very well. And the other one is the IT space. IT, of course, following the rally that we had in NASDAQ. But these are the two sectors leading the charge today. Hi.
Hi. Oh, absolutely. We have been talking about the metals pack doing very well last week as well, right? So that will come up for you. The 1 week move on the metal index has been almost 9%. 1 month move on the metal index. So that's looking extremely solid. IT across the board, you're seeing good, buying interest come through, whether it's the large cap names. So some of the larger ones will be up for you. But even the mid cap, something like an Emphasis is up almost 3%. You have LTI Mindtree, which is doing very well. So all of these holding up with good gains. And like Reema was pointing out, the momentum really continues in the Adani Group stocks. You're seeing that once more in the banking names, particularly the PSU banking names. So something like an SBI is up over 8% in 1 week. You have, a lot of the other names, pretty much everything. I'll just put up a few of them on your screen. Something like an Indices, and you have Bank of India, which is up 24% in the same time. So in 1 week, that's the kind of, buying interest that we've seen ever since the up move really started in the Adani Group stocks. But all in all, Sonal, we, started with good gains and we've only moved high from there. It's a 100-point gain even from the opening levels.
Festivals make everything happy and cheerful, right? So as Reema said, the color is green. All the sectoral indices are in the green today. And if we talk about stock-specific news as well, there are a couple of them which are in news, and most of them from the sectors that I track as well. Gujarat Gas higher on the acquisition that they made. Neogen Chemicals similarly higher by around 4% on Bulak acquisition that the company has gone ahead and made. It's for backward integration. So that stock is in focus as well. There's been a sharp decline in terms of stock price from the highs for Gujarat Gas. Of course, MGL is the one which has made that acquisition. GAIL is the one. There is a possibility of a hike in tariffs as well. So that stock is higher. ONGC and Reliance Industries on the back of the windfall tax changes that we have seen as well. So a lot of stocks in focus, but we'll get to the first management that we have on our radar today.
Indeed, we've got Angel One. That's the first corporate on Trading Hour today. The broking firm posted a very strong February business update. A 15% rise in cross-client acquisition and market share gains in all its segments except cash. In fact, the commodity segment market share has gone up by 600 basis points, the highest in the last 18 quarters. We're now joined by Dinesh Thakkar, who is the CMD of Angel One, to take some questions for us. Mr. Thakkar, morning, and thanks so much for joining in.
Morning. Morning. Thank you for inviting.
It was extremely volatile for our markets, yet you've reported the highest ever day orders. How sustainable is the number? Are you continuing with that run rate even now?
Yeah, we are seeing kind of like a good traction of volume from existing as well as new customers. So like our strategy is to go to a pocket which are virgin and who have not experienced much about equity market. So kind of like market that we are targeting and we are addressing, I think this kind of a momentum can continue, looking at under penetration in all those pockets.
per day orders of about 4.2 million is sustainable?
See, like it depends on market condition and lots of things. But if you look at the band that we have clocked, always it is around 4.1 million or 4.2 million. So that range seems to be quite stable, despite we saw lots of kind of like headwind for this last 3 or 4 quarters. So based on like an historical trend, what I am seeing and the market that we are addressing, it appears to be it's a sustainable trend. But if we see a good market condition, which appears to be on the radar, I think we can see an improved kind of like participation from existing and new customers.
All right, got that. Good morning, Mr. Thakkar. Thanks for joining us. This is Pavitra. You know, I was looking at your average revenue per client. That seems to have come down. I think in Q3, it's down around 7%. Can you take us through a little bit of how much of a competition are you seeing in terms of, you know, brokerages offering a lower fee? That's one. And what is the kind of average revenue that we can expect going forward?
Yeah, so to look at average revenue per customer based on, like, as I said, that new pockets that we are acquiring. New pockets that we are going, they are quite young customer with kind of a lesser kind of like capabilities in terms of wallet and all that. But we are looking at longevity of this kind of customer is far higher than old set of customers. So when we are acquiring a new customer who are new to market, they are not as active as old customers, like customers who went to urban tier 1 and maybe tier 2. So what we look at is that what is an average revenue that we get from a customer and what's the cost of acquisition. So when we look at business metrics, it appears that metrics remain same if it is urban customer or a customer from tier 3 or tier 4. So what I would like to say is that business metrics are as healthy as they were with urban and tier 1. But revenue that we are getting from younger customer would be lower than compared to relatively what we are getting from our old customers.
But then I'm guessing you're planning to continue with this, right? Trying to acquire younger customers as well. So does that mean the average revenue will continue at around 400?
Yeah, this is what I'm saying. We have to look at the metrics that even cost of acquisition also reduces proportionate to revenue.
Yeah. Okay.
So if we talk about margins, that we always have given a statement that we'll maintain our operating margin of 50%. So that metrics remain same. So if you look at growth of this pocket of younger population, it is quite huge.
Okay, all right. So if you keep adding on that segment of customers, of course, that is something which will have an impact, and we'll track that as well. But in your commodity segment, we've seen a lot of volatility there as well. You have gained market share. It has come in at 56.9% in February versus 51.1% in January. What led to this jump? And again, is this something that you are seeing in March so far and will continue?
So it is very difficult to predict when we are at a very high market share because it also depends on market condition. So what I can say that kind of like app that we have for commodity, people have got very used to our features and they like our features. So we are saying when we are going to newer pockets where people are comfortable doing commodity apart from equity, we are getting a major market share. So taking a call whether it will remain, whether it will continue growing after this stage of 51, 55% would be a very difficult call.
So when you're talking about apps and people using your apps for commodity transactions, what are the kind of downloads that you've seen? You're split between digital and the online transactions that people do?
Most of our transactions are done on online and digital platforms. So we have customer across like mobile app and web platform. But majority of our customer comes on our mobile app.
Majority of your customers come on the mobile app. Mr. Thakkar, the resignation of your CEO, Narayan Gangadhar, came in as a negative surprise for the markets when it happened in the middle of February. He was amongst the key hires that you made. He scaled up the digital capabilities. He led the business transformation. Can you tell us the thinking in terms of hiring a new CEO, internal, external, timeline? Do you have anyone in mind?
Sure. So like we were looking at next 5 years when we want a kind of a CEO who can take us forward in terms of multiple journeys that we are building apart from broking services. So as you know that we have recently launched Super App, and now we are looking for somebody who can be very kind of well-rounded in terms of tech as well as business side, and should be having a good exposure on multiple services in financial services, I mean. So we are looking out for a CEO who would be having this kind of capabilities. So most probably it would be external.
Okay, and any timeline in mind? Have you zeroed in on a few candidates?
No, we have to yet start zeroing down on candidates. So process of searching candidate is on.
Okay.
So it will take around 7 to 8 months for us to get a CEO in place.
Okay.
All right, got that. Just one more question from my end. You were talking about the customer acquisition cost also going down because, you know, you are looking at these new pockets as well. Can you just take us through where that stands right now?
So when I say customer acquisition going down, I don't mean exactly in terms of absolute number. So we look at CAC to LTV. So when we look to CAC to LTV of a younger population, that LTV seems to be like spread across many more years than old set of customers. So when we look at the ratio, it appears disproportionate to what we are spending for old customers.
Okay. Mr. Thakkar, last question before we let you go. We are talking about a lot of things happening in the markets, outlook going forward as well. In that sense, what would your margin picture look like? It, of course, has been increasing. 2019 was 26%, 2022 was 40%, and that is something you've been able to maintain in Q3 as well. Is there a margin band in mind which you will ensure that you achieve?
Yeah. So always we have, said in our analyst call and all that, we would like to maintain a margin of 45 to 50% because there we have already in that scale where we have kicked in operating leverages and all that. But our focus is more on getting market share of new pockets. If you look at India, as I said, it is hugely underpenetrated. So we are spending more to go to that pockets, acquire a customer. So we would be very happy in terms of spending higher margin on research, technology, and acquisition, and maintaining our margin of 45 to 50%.
Okay, that's a pickup compared to your current margins of 41%, right?
No, currently they are at the region of around 51, 52%.
Okay. Okay, so you're anticipating a slight dip in margins, perhaps, given the investments?
No, see, we have launched super apps, so definitely we have to spend on branding. As I said, that we would like to be aggressive on acquiring market share of new pockets and all that. So we'd like to be into that investment mode of spending more money to acquire market share.
Got it.
All right, Mr. Thakkar, thank you so much for joining us today. That's the word coming in from Angel One. The stock is higher by 2.5%, and this is the word coming in from the management on their February update. We'll slip into a short break and we'll discuss what's buzzing in commodity space with Manisha Gupta on the other side. Stay tuned.
17,775 on the Nifty. That is the kind of up move that we're seeing, over 1% higher over there. The mid caps also doing very well, absolutely in line with what's going on with the frontline index. It's a 1% gain there as well. And the momentum today really led by the metals pack. Of course, what's going on in the Adani space as well as some of the PSU banks that we've been talking about. But let's see if, what's going on in the world of commodities as well. Manisha joins us today. And actually today she's going to talk about gold and sovereign gold bonds. Manisha.
Thank you for that, Pavitra. Well, we have seen the gold prices continue to rise. Last week was the first increase in 5 weeks of decline, and we have seen the prices come back quite sharply, making a low of $1,810 an ounce. It's trading at around $1,855 an ounce right now. So there has been good buying on the back of the fact that most of the Fed officials are now suggesting that the rate hike should be at 25 basis points. Also, the dollar index seems to be steadying now. China growth slightly on the weaker side also seems to have led to some tangible commodity buying that has happened in case of gold as well. And on the positive side, we also have seen the gold bond scheme 2022-23 series 4 now open between 6th to 10th of March. It opens today, and in the recent few years we've seen gold buying via gold bonds actually pick up quite strongly. The good thing is that if you're looking to invest in gold for a slightly longer term in sense of your portfolio, this perhaps is the way to do it. The issue price is at 5,611 rupees per gram, but if you are buying it online, then there is a 50 rupee discount onto this at around 5,561 as well. The minimum permissible buying that you can do as an individual is 1 gram. That is the minimum, and you can go up to 4 kgs on this. Another big advantage into this is that going forward, you will of course gain on whatever gains that we see in sense of gold prices, but 2.5% that you earn annually, which is given into your account biannually, is yet another thing that makes this quite lucrative. In the recent few years and months, we've seen most financial advisors also advise including SGB as a part of diversifying your portfolio in sense of gold for a longer term. Remember, when you buy SGB, you can hold it for 8 years, that is the maturity time, and 5 years minimum, that is the time you can perhaps redeem this as well. So we have seen good traction in the last few months as the gold prices have continued to gain up, and this is the latest tranche which markets do believe has come during the holy time. This is the time that people do go out, buy jewelry, gold and silver, so that perhaps is the reason to get it during this time itself.
Okay, so Holi this time is yellow as far as commodities are concerned and green as far as equity markets are concerned. Thank you so much, Manisha, for joining us. That's about sovereign gold bonds. But moving on now, Vedanta Resources founder and chairman Anil Agrawal is extremely confident about Vedanta's financial health. Speaking exclusively to CNBC-TV18's Nigel D'Souza, Agrawal said with $30 billion in revenue and $9 billion in profits, Vedanta has enough internal accrual to repay debt and even raise fresh funds. He urged the government to divest its residual stake in Hindustan Zinc, saying the promise was made 20 years ago. Here's a slice of that conversation.
Now, the proposal of Hindustan Zinc to go ahead and buy International Zinc's assets, well, the government of India seems to have opposed it at least as of now. But you have said, and your spokespeople have said, that you all are in discussions and best for the shareholders and for all stakeholders will be done. So what's the plan B out here? Will you be looking at a share swap, another way of getting this deal done? Is there a plan B?
I want Hindustan Zinc by itself. I'm thinking that the way the scope is, we can make it, Hindustan Zinc today is a $20 billion company. We can double it in no time.
Right.
But we have, zinc is a scarce commodity, and zinc is required for today's environment because naked steel you can't use.
Correct.
You have to use galvanized steel, and we produce silver. Silver is a very, very important commodity for everything.
Yeah.
So we need to grow, and we got this asset which is under the same umbrella.
Yes.
Same umbrella. And today, how Hindustan Zinc is running? Because we have all the talent from the South Africa.
Yes.
We don't have mining talent. So we got all the talent from South Africa, and this hodgepodge, huge leakage. If you can put these two companies together, the company 2 and 2 going to be 6, not 4.
Right.
So that was the whole idea, because we have bigger asset than the Hindustan Zinc. We did a very conservative valuation, and the money which is lying in Hindustan Zinc, we are getting return of 2 to 3%.
Yes.
If we take South African asset, which is a producing asset,
Right.
profit-making asset, if they put them together, the return is almost 17–18%. It is the right move. I'm saying why government has agreed that we will sell 100% share 20 years back. You know, how much you hold us, our leg, not to run. They have to take a decision to disinvest this 29%.
Yes.
If there is a clear-cut agreement that they will be divesting to us with a particular formula, and government can get probably 50,000 crore, 40,000 crore, and they want to do it, but they have to accelerate. If they go away, then we can run our company. Company has to run by the board, not by the government.
Welcome back. Still tuned into Trading Hour on CNBC-TV18. Dollar Industries, that's the next corporate on our radar. It delivered a weak set of Q3 numbers. Lower cotton prices, the volatility in the markets is something that impacted their financials. Revenues declined 16% on a quarter-on-quarter basis, with a 200 basis points contractions in margins as well. High cost inventory also weighed down on the performance. To discuss this, and more importantly, what is the outlook going forward, we now have Mr. Vinod Gupta, who is the managing director of the company, joining us now. Mr. Gupta, good morning. Thank you so much for joining us here. Well, Q3 was impacted by the volatility that we saw in raw material prices. We are almost towards the end of Q4. Can you tell us how has the situation been when it comes to raw material prices? Have you seen some improvement? And will you be able to achieve your guidance in terms of revenues that you had given us earlier, 1,500 crore rupees? What is the guidance in terms of margins and revenues?
Well, if you look at the volatility in the market, in the prices of raw materials, which is the cotton, now the prices have already been bottomed out, and now the entire industry has got a confidence in terms of the price of the cotton which is running in the market. The prices have already been bottomed out. That a good amount of business is we are going to see in the near future. In terms of the prices of the products, we have also been bottom out. Now we have got the confidence that there is a good season ahead. in the Q4 time, we understand that the demand from the market is really good, and we also see that the coming season, the summer season, is also going to play a major role in terms of business we are going to have with them. The buyers have also got the confidence that the prices have been bottomed out, so now they can also do a good amount of business.
What will revenues for FY23 look like? You had earlier given guidance of 1550 crore rupees, Mr. Gupta.
Yeah, in the last 9 months, we have been able to do 990 crores of business, and now in Q4, we understand we will be able to do something around 450 to 460 crores. So if you total it up, it amounts to around 1450 crores of business we are going to do in this financial year.
Okay. Can you break up this Q4 revenue growth in terms of volumes and pricing? Because I remember in Q3, your volumes declined by a whopping 32%, while the average selling price went up by 7%, which is why net at the revenue level, it was a decline of 25%. So for Q4 currently, since you have a fair amount of idea of what the revenues will look like, can you break it up in terms of volumes and pricing, sir?
In terms of volume, if we see, we are going to have more than 10% of volume growth as compared to Q4 22.
So volume growth is 10% year on year. And quarter on quarter?
Quarter on quarter, of course, it will be around 25%.
And pricing, sir?
The pricing, see, the ASP, whatever we had in the last quarter, that is going to continue.
Got it.
But then in terms of, if you measure it with the Q4 22, it will be slightly lower.
Right, got that. Mr. Gupta, you also had a warehouse and spinning capacity which was supposed to commence in 2023. Can you tell us, I think there was 115 crore capex plan for that. So can you tell us what's happening on that front? What is the expected revenue and when will it start flowing in?
Now, in terms of the spinning, we are going to double up the production capacity. Right now, we are having a capacity of around 9.5 tons per day spinning capacity. That we are going to double it up. And this entire exercises will be complete in 23-24. And in terms of warehouse, the new warehouse we have built up of around 4 lakh square feet in Calcutta, that is almost complete, and we are going to move into that warehouse, which is going to result in benefit in terms of logistic cost. That movement will take place only from the next month. The warehouse is almost complete. And now we also had capacity enhancement in terms of solar energy. We have already commissioned the 6 megawatt solar power. Previously, it was only 4 megawatt. So there's an increase by 2 megawatt solar power that also has already been commissioned. Only that out of the capex which we had planned, only this spinning capacity is still in progress. It will take another 8 to 9 months to complete it.
Okay. So when it does come on stream, Mr. Gupta, the spinning capacity, will it be used for sales completely outside, or will it be will you be using it for your own product?
No, it will be all captive.
It's captive. So what kind of margin or cost savings will you see? Margins have been around 13 to 14% is 7% right now. What can you scale it up to once these cost savings kick in?
There should be some increase in terms of EBITDA percentage, whatever we are having. So it will see increase by around 0.25% to 1% increase in EBITDA because of this addition of spinning capacity.
And have you used up all your high cost inventory?
Yeah, the high cost inventory we have almost completed, and this is the last quarter of this financial year, and you will see in terms of numbers what we are going to achieve in this quarter, that it's already been utilized.
So, Mr. Gupta, what could Q4 margins look like with the addition of the spinning capacity, with the solar power that you're getting on board, with the pickup in volumes? What could Q4 margins look like?
So Q4 margins is still under pressure. Maybe not that much as we had it in the last 9 months, but still it is under pressure because we have to come up with we had an overseas conference with over 450 dealers moving out of India for the business conference, and we had to launch certain schemes also, so that we can get back the confidence of the distributors, so that they can have a good amount of business in Q4. So margins are still not up to the mark which we had focused upon. But then but since the bad time is already over, we are quite confident that 23-24 we will be able to move back to the old days.
All right, Mr. Gupta, we leave it at that. Thank you very much for joining us and taking us through the outlook for dollar industries today. The stock is doing very well. By the way, it's up almost 4%. But we do have to get into a short break on the show now. When we come back, we will continue to track the markets. We will also have Rahul Mohinder to join us, and he'll fill us in with some of his top trading bets at the moment.
Welcome back. Sustaining a 1% rally on the benchmark indices, Rahul Mohinder of ViraTechIndia.com is with us on the show now. Rahul, 2 strong days on the trot now, and today the follow-on rally is quite inspiring and encouraging. Is there a trade at current levels?
Absolutely. I mean, stock specifically, there's a lot more. But again, from an index standpoint, the level to watch is 17,820. Going past 17,820 would help me confirm, based on several indicators and resistance breakouts, that we would probably move closer to that 18,100 mark. But I think the bigger question is, are we out of the woods? In the sense that if we observe the price action from December, every month has really been a lower top. We haven't been able to, in January, get past December. In February, haven't got past January. And March faces its challenge at 18,130 odd. So I think at least above 17,820, we should get closer to 18,100. And I think the final verdict would be if we can get past it and we break this rhythm of a downtrend. So that's what I'd watch for. But again, stock specifically, as I was saying, several trades which come to mind. And I think let's start with a Reliance. Being a heavyweight, this one could really help the index. And my sense is, in the near term, if you're just targeting the near term, we could see 24.45, keep a stop loss of 23.95 while buying. But again, if you can make this a medium term buy, I think it makes more sense. I expect Reliance to move to 25.30. But for such a trade, you'd need to keep a stop below 23.70. Please observe that over the last 18 months, Reliance has always been a fairly good buy close to that 2300 mark. So we've bounced off a very good base, which is why I would say even at these levels, it's worth a buy if you can give it some time. Bajaj Finserv, a good volume breakout visible based on last week's volume action as well. So I think this stock is finally going to try and make a move. Keep a stop loss below 1355. I think we're heading to about 1450 to 1460 on this stock. This is not a day trade, not a short-term trade. This may take a couple of days. So one needs to hang into this stock. We've seen a good base building here in the last 2 weeks, 1330 to 1380. We've really built that base, and hopefully we're getting through that. And that's what I'm reading as a breakout. Finally, Power Grid. That's another stock which features on my buy list. We've got to observe, a very big spike in volumes last week, 205, 225. That's a range. It's spent a couple of months between. And again, I'm trying to use this level as a breakout. Target of 232 if you're short term. Finally clearing 232. I even expect the stock to go to 244. Keep a stop loss below 222 when going long.
Okay, Rahul, thank you so much for joining us. So that's a technical check on the markets. But from the broader markets, there are a couple of stocks which are moving around, and I'm focusing on MGL because they've gone ahead and made their first acquisition so far. They've acquired Unison Enviro Private Limited, and that is for 531 crore rupees. It's an all-cash deal. Unison, remember, is the city gas arm of the other listed company, that is Ashoka Buildcon. They will be entering new geographical areas for pursuing inorganic growth opportunities. That is what the company says is the reason why they've gone ahead with this acquisition as well. Now, this particular company which has been acquired has 3 geographical areas and has wider range as far as volumes are concerned. So it comprises of Ratnagiri, there's Chitradurga, Latur districts. So these are the areas where MGL will now get access to. In terms of revenues, the company did revenues of 89.4 crore rupees in FY22 but made a loss of 25 crores. Now, so of course, that makes it an expensive acquisition as well for the amount that the company has paid. Now, ICICI Securities says that despite that, it is a good acquisition because it will give them more access to volumes. In the industrial and commercial potential, it has volume potential of 0.2 to 0.25 MMSCMD, which is in the next 3 to 4 years. If we club it together, it would mean the company can make volumes or add volumes of 1 MMSCMD by FY28. They have a buy rating with a target price of 1125 rupees per share on the stock. Citi says they have a buy rating with a target of 1030. This is the first inorganic foray that the company has made, and they like it. So while the headline valuation, that is price to book on trailing basis, is expensive at 6.4 times, they would view the acquisition positively. The acquired company is at an early growth stage, so they can actually scale it higher as well. And it could be a good use of the cash that is lying in MGL's books of accounts. And it could also change the perception that MGL is not very aggressive in terms of volume growth, because volume growth has been an issue for MGL for a long time. So this would be a reason why investors could look at the stock in terms of a positive volume growth as well. So that's why the stock higher by 6% in trade today. Pavitra.
Oh, absolutely. It's a good move that we've seen 6% higher on MGL. Sonal, thanks a lot for that. But with that, we are going to get into a short break. On the other side, we're going to talk all about the auto retail sales. This is for the month of February. We'll have Manish. Welcome back. You're still tuned into Trading Hour here on CNBC-TV18. And let's talk about the auto retail sales now. Data from the Federation of Auto Dealers Association shows that total retail sales saw a growth of 16%. This is versus what we saw last year. But the figure is still around 8% lower than, the kind of levels that we've seen pre-COVID. So to discuss, we're joined by Manish Raj Singhania, who's president of FADA and joins us on the show now. Mr. Singhania, thanks a lot for joining us. This is Pavitra. So, like I was pointing out, Feb has been quite good. We've seen around a 16% growth. But, I mean, you did have the wedding season in February. So that's, I'm sure, something that has aided auto sales. Also, with the, predictions of an El Nino, and we don't know how the monsoon will really pan out, how do you think March, April are likely to move?
So March, we are also pretty confident March would do well because there's a change from OBD1 norms to OBD2 norms coming in. From 1st April, OBD2 norms vehicle would be plying on road and would be built from the customer, from the OEMs. And those vehicles are slightly costlier. We can see a price hike in two-wheelers to the range of 1,000 rupees to 2,000 rupees, and on an average in PV, a price hike of 20,000 rupees. And plus, we have got a lot of festive days in March, especially Navratras. So overall, we see a positive March happening there. Customer would be hugely benefited by buying anything in March because they would get this OBD1 advantage. And definitely, prices will definitely increase from 1st of April. So good time to buy vehicles. So overall, a positive March, that's our expectation, both on two-wheeler as well as passenger vehicle front.
Okay.
So pre-buying and a combination of festive season sales will result in a strong March number, both on wholesales and retail, right?
Right.
Okay.
In fact, for two-wheeler industry, it has been pretty good. We could see wholesales lesser than the retail. So there has been a stock correction on two-wheeler with the two-wheeler dealers. So that's also a very positive trend. And you are also talking about the weather part. Definitely, the rural India or Bharat of India is kind of stressed, and we can still see they haven't yet recovered completely from the COVID backlog. And if we don't have a good monsoon, that would further stretch the rural India, and recovery would be a bit slower. We are already anticipating recovery to be pre-COVID to the pre-COVID level in two-wheeler for a span of 1 year. And if monsoons don't pan out good, and rural India is driven by crop and agri economy, that would further stress the...
By what percentage, sir, do the rural sales today fall short of the pre-COVID level? What's the gap?
Between, you're talking about...
rural sales, say for two-wheelers, which is a fair indicator, fair gauge. By how... yeah, go ahead.
Yeah, so overall, rural sales contribute almost 30-40% in the total auto retails. So, and they are on a different stress, and they continue to be on stress.
Okay. You expect a continuous stress as far as the rural space is concerned. What about inventory levels, sir? Because that could be impacted, right? If there is no certainty with respect to the weather forecast or monsoons as well. What is it currently? Is there an expectation, at least from the rural side, that inventory levels will go up?
So right now, since the changeover is there from OBD1 to OBD2, so there would be OEMs would be finishing off and dealers would be finishing off with the OBD1 norm vehicles, and retails have been responding well overall. So dealers are at a very comfortable level of 30 days approximate across two-wheeler and passenger vehicle stock levels. So that's at a comfortable level, and on top of that, we are expecting a good March. So that would further give a good correction for the stock levels at the dealer end.
All right, got it. So would you also have the breakup of what we've seen in terms of the SUV sales or, you know, the lighter vehicles? Do you have that as well?
Yeah, I don't have the current data exactly what happened in February in terms of breakup, but definitely for PV sales, SUV is driving the market strong and hard.
Yeah.
Okay. Since the supply side situation has eased, has the waiting period come down across the popular models? And if you could share some numbers?
Yeah, so what has happened is, apart from, if you see from till last September, we have been talking about bookings to the tune of 6 to 8 lakhs available with various dealers and OEMs. So that continues. What is interesting is happening while we are addressing the bookings, dealers are getting the fresh bookings also. So that has kind of, maintained the booking level at the dealerships. And the semiconductor crisis has not totally resolved, and we can see stress in, especially in high models where the semiconductor requirements are more. So an overall estimated 7 lakh bookings are there across various brands and across various OEMs in dealerships. So that's a very positive sign. And unless and many OEMs are also trying to add capacities.
Okay.
They're trying to increase capacities and ease out semiconductor supply. That will only ensure proper delivery of, timely delivery of vehicles to customers.
All right. Okay. Mr. Singhania, thank you so much for joining us and giving us all those details. So that's the view as far as the auto space is concerned, the industry-wide phenomenon as well. Time for a short break now. We'll get you more on the market on the other side. Stay tuned for that.
Okay, so for the corporation, we have the Northeast, Andaman, Nicobar and Lakshadweep as the places where we will be focusing a lot. Of course, we have a lot of presence there already. What we thought of, and this was a general sense of the house, that can we also have facilitation centers opened up to answer some of the other questions, where people can come just to find out, what the product is all about in general, about life insurance and things like that, before they take a decision to get into it. So something like that, we are working on it still. So let's wait and see what happens. Apart from this, there was a lot of discussion on business growth. Of course, that's part of because it's the month of March. Also on claim settlement, and the point that the moment of truth is when you settle a claim, be it a maturity, survival benefit or a death claim. So what we can do to, make it faster and make it simpler for people to access claims. These are some of the discussions we had.
There has been a strong focus from the regulator as far as growth is concerned. We also remember about 6 months ago, targets were given to various life insurance companies. Now with what has been announced in the budget, which sort of becomes effective from 1st of April, does it become more challenging for life insurance companies to clock that growth if the heavy chunk of premium is taken out?
Can't really say, because we are still working. There are many products which are very attractive. Let's look at the product. Let's look at the basic principle of insurance. So once you focus on that, I think tax rebates, as I've said before also, is a thing of the past. People don't really pick up insurance for the tax rebate part of it. So I do not feel that it is going to have a major impact. There could be small impacts here and there. We'll have to work on it, and let's see what happens.
Okay, I want to ask you something about reinsurance rates as well. Since COVID, of course, things have started becoming normal, but the rates haven't still dropped. Though they haven't increased, but there's no drop, which is the sort of problem which life insurance companies are facing. What is your sort of communication with reinsurance companies when it comes to reinsurance rates itself, especially on the term side?
We are engaging with them. I mean, yes, it's been a challenge, especially post-COVID, but we're constantly engaging with them. Let's see, going forward, I hope it eases out, because we are also focused a lot on the term part now. Yeah.
If it does, what will be the timeline that you're seeing in terms of those rates easing out?
I don't know. I don't know how long it's going to take. Maybe we are now looking at a short closure of the year, before we think of anything else.
One last question. The last time we spoke, you of course had mentioned that you will be meeting or talking to the Adani Group management also to understand their business strategy on what's happening in the markets, the outlook and so on and so forth. Has that conversation happened? It's been about a month since then. Has that conversation happened? And if yes, then what is the understanding that you derive in terms of your confidence in the company and its plans itself?
Well, I can only confirm that the conversation has happened with the department, but there's nothing I can state as of now on the outcome of that meeting. But we have had the meeting.
Are you more confident than you were about a month ago on the business prospects, not the stock price, the business prospects?
I believe so. We are quite happy about the meeting.